Welcome back to my morning pot analysis videos on Tuesday the 21st of March with me, Richard Perry, market analyst at Atlantic Markets, looking at sterling and dollar. Sterling has broken out, really burst through higher. It's now over 100 ticks up on the day, boosted by that much higher than expected inflation data from the UK. And that really does give the Bank of England a bit of an issue with those Bank of England minutes last week showing that several on the committee were concerned about inflation, and that is certainly the case. And it is the sort of upside move on sterling that now breaks out. It looked as though that little sort of rally had been sort of running out of steam, and earlier on, certainly in the absence of the inflation data, the market looked to be rolling over on the rally, but just burst out today now, and really strongly higher. Here you can see the hourly chart whereby the inflation data is this candle here, bursting through that resistance at 24.35 and continuing the move higher. Now this sort of holds on to this support at 23.20, so that support becomes increasingly important. I had looked at that becoming a possible head and shoulders top pattern, but certainly that's now been broken and burst through. 23.80, bit of a near-term pivot, so that is your initial support. Also that is back to just prior to the inflation data as well, so that's a level to look out for. 23.80 on the downside, little minor support also at 24.35, but certainly the market is looking higher, with these momentum indicators now beginning to gain traction again to the upside, certainly with this bull candle that we've got in place at the moment, testing the resistance arguably at 24.85, but that reaction high at 25.70 and also 25.82, this sort of resistance from this little February trading range that we were in. Certainly looks as though the near-term outlook has changed on this inflation data, so you've got to be sort of factoring that in, I think, now for further gains, but I still remain a little bit cautious with the rallies that we get within this trading range. Certainly having had that downside break in early March, yes, we've turned that around, but I think you've got the overhead supply of all this sort of trading range from February still to factor in. So if we sort of post another lower high below 25.70, you could argue that's still sort of a fairly negative outlook within this sort of trading range, but just for now we're looking more positive. RSI is pushing towards 60, again that's another trigger. If the RSI can hold sustainably above 60, that would suggest that the bulls are in control, but it'd be interesting to see how this one reacts. But certainly for now the bulls are in a near-term positive scenario and pushing higher, and the resistance overhead is set to be tested. So I wish you good luck in the trading, and I'll speak to you later.